for now, when we have this direction, at least for a fifth wave of wave 5 of an extended wave 3 here still ongoing, I think that obviously dollar could stay in this bearish mode. And looking at dollar index wave count here, notice that we finally came very closely to this gap from the beginning of October. As you know, we have been talking about this gap a lot. We highlighted it even when we were still on this rise around 100 level, and now you can see that market came very nicely back to the downside, close to this gap, and now we are seeing some rebound, some stabilization. It's total normal because of this position adjustment going into the end of the year, and because it's Monday, because market will be very slow this week. I'm not sure if we will get any strong push to the downside just yet from here. You certainly should realize that this choppy price action could resume, but what I would personally watch for, if we see some strong push to the upside on the dollar, maybe around this in the mid of the week or so, then in the next week, especially maybe then at the start of January, I would be expecting the dollar will once again try to resume this downtrend. So any kind of a bounce here, in my opinion, is just maybe some opportunity to join this trend, and maybe even look for some kind of a dollar shorts across different currency pairs, because market is already pricing in more cuts, and that is something that could keep this dollar clearly in downtrend. But as I said, maybe because of this holiday season, just keep in mind that maybe it's not the best idea to chase the markets here going into the end of the year. You just want to be maybe have some calm last few days of the year, and then look for potential setups in January. Now looking at the euro dollar, as you know, I've been highlighting that possibly we are here in a fourth wave triangle. We know that the ECB is much more hawkish than Fed, who is dovish, and this is something that could define the first few months of the uptrend here on the euro dollar. So I'm still looking for 1.2 level, maybe even slightly higher, but then I would be expecting that this cycle will come to an end, okay, in 2026, and maybe that's when whole assets could turn around a little bit. I'm also expecting that stocks will make a pullback, and as I said, I have ready this video for 2026 where I will also cover stocks. I will also look at the dollar, and maybe it's not a bad idea to show you what I'm looking at the dollar. I also shared this on X as well, so here is this one. Okay, so that's probably the most unpopular opinion, if I can say it like that, right? So notice that I'm looking at dollar index positioning, and we can see that large speculators are heavily short, and look where we are. We are very, very close to these extremes from 2007, 2008, and we exactly know what happened back then. So in my opinion, this kind of a positioning just suggests that we are moving into some extremes here, and definitely it's something that we have to consider, especially when we also on top of that have some Elliot wave structure and other signals that could possibly hint that maybe the dollar will see one more push to the upside at the beginning of 2026, maybe first half of 2026, and then possibly we will try to stabilize somewhere between 90 and 95. Okay, so that's probably the most important chart when I go where we are going into 2026, because everyone just expects that there will be more cuts coming, that yields will come to the downside. Keep in mind the dollar has seen a pretty nice move lower so far, but that US yields, the 10-year, is still somehow very sideways there, right? So I just think that there could be some very interesting reversals in 2026, and that's something that we have to consider. But of course, that's more for a longer term perspective. For the short term perspective, it's still very clear that dollar index did not complete the downtrend yet, right? And if we try to link this with other markets, other pairs, of course, I'm also expecting that pound will continue higher. What's interesting about pound, that last week CPI has softened, Bank of England cut rates, but after initial drop, cable relatively quickly stabilized, and we talked about this 133 level as a very important support, and I think that now we could maybe consolidate for this week. I would not be chasing again this pair here, but if we would see, let's say at the beginning of the week, like a retracement back to this level from last Thursday when Bank of England cut rates, I think that this could basically be a very interesting support for potential rebound if we'll see this level tested. Also keep in mind that we are approaching some resistance up here, so again, not the best place maybe to look for some kind of a fresh longs, but after some a bit longer pause, especially if we consider how wave 2 this one was deep and also longer in time, I just think that this could be a bit not enough maybe for this wave 4 to say it's finished, right? So that's something to watch for. Also, it's Monday. We know that Mondays can be very tricky. You can see maybe sharp moves on Mondays, but usually Mondays will not define the direction for the whole week. Usually these Monday flows will be reversed. So if we see now sharp move into that resistance area because of holidays, of course I would watch out for another leg to the downside, for some stabilization, not necessarily a sharp drop, but maybe just more sideways to the right, and then we see another push higher there. By the way, guys, anyone who is here for the first time, make sure to subscribe to our channel and press a like so that we will be listed higher here on YouTube. Now, looking at dollar yen, this one is also interesting. BOG hike trades, but still market somehow is ignoring what they are doing, what they are saying. It looks like that this push to the upside that we are seeing right now could be more linked maybe to potential speculations that US yields could possibly that stocks could possibly stay in this recovery mode, and this, as you know, is putting some bearish downside pressure on Japanese yen. And as I said last time, I still think that there is a chance that we will see a retest of this 159 area or so, which dates back to January 10th. So who knows, maybe we'll see new highs for this year in some final days of now of 2025, because that was January 2025 highs. So that would be maybe the first thing, resistance to watch going into a new year. Then very big level should be 160 and followed by 162. So for now, this trend, this recovery is not really finished yet. We'll see if BOG will try to turn this trend around. They certainly are not satisfied with the current situation here, and I'm sure that maybe some rhetoric could be the early or first trigger for potential reversal if we will start moving into this 160, 162 resistance area. Also looking at dollar CAD, as you know, we talked about this one as well 1 week, 2 weeks back. What's probably the most important and very clear here, that was an impulse down. Then we had a pretty nice recovery for the around 50% of the previous decline. Then we even broke this, let this not confuse you. Then we also broke this channel pretty aggressively. So that's the most important indication that you can get for potential resumption of the previous downtrend, especially when you have such an strong extended lag. So in such case, of course, someone wants to join the downtrend here. We always prefer to watch the opportunities on retracements, and looking here at the sub waves here on the 4-hour time frame, that was a very nice extended wave 3 to the downside. We stabilized here at the previous support levels. So what would be ideally is that wave 4 will now unfold, took place in the next few days, maybe even 2 weeks, and then market will resume back to the downside when we return back to normal flows in January, right? So in the beginning of January, you can still see some, because of new position adjustments for the new year, you could still see some both-sided moves before maybe the market stabilize and find the real direction, let's say maybe in the third week of January, and then that could set up the ideal conditions for potential next sell-off. So I think that the previous resistance here is a pretty important one. If we can speculate that maybe wave 3 has ended here, of course, then that level around 13870 matters. It also the level that comes in around this wave 4 that equals to wave 2. So you can sometimes, when you have an extended lag of wave 3, waves 4 and waves 2, which are corrected lags, will be similar in distance. Not necessarily the case, but it can be the case. Also, based on this sharp wave 2, we have to consider a rule of alternation. So what that means? That means if wave 2 was sharp, wave 4 can also be a bit more slow, sideways, maybe like a triangle. If wave 2 is a bit sideways, maybe like a flat or something, then wave 4 can be a bit deep. Okay, so that's something that I always try to consider whenever trying to apply the best proper wave count to the current conditions here. So the bottom line is, it's a downtrend that is resuming, and I think that after a bounce we could experience more weakness. Commodity currencies, as you know, are usually doing pretty well when you have stocks in risk on mode. Also Kiwi, this one is making a pretty nice reversal as well. We talked about that a lot, even back here when we recognized this ending diagonal. We had a very nice strong push out of this ending diagonal, and we came back to this second wave resistance. Also, it was the low here that dates back to August 21st as well. So this whole area, as you can see here, it's a very important one, right? So it's not really surprised that we slow down a bit here, and now it looks like that we are pulling back for wave 2, and I think that it's just a matter of time when we will see a next push to the upside. I dare to say that market will try to break in the first weeks maybe of 2026, that market could start breaking this trend line resistance connected from July 2025 highs. What's the most important here about this whole structure is that we overlap this previous wave A, right? So it means that even if someone would say that that was wave 4, it would completely invalidate the wave count. Okay, and that's something that you always, maybe if you love the Elliot waves, if you look at the market from Elliot wave eyes, that you always try to find, if you are bullish, always try to find the level, the best bearish wave count possible. And if that bearish wave count is invalidated, that's when your bullish bias can be confirmed, and that's when you may start exploring the ideas in this kind of direction. But as a traders, of course, it's always important to just be aware of what if this will not work out, and that you are ready maybe for the opposite of what you or market in general expect. So you want to be ready or prepared rather than surprised. So keeping different wave counts, of course, is very important, but I always somehow try to not to show you too much of the wave counts, because then I know that if someone is not understanding Elliott waves in details, it can also, on the other hand, cause a lot of confusion. So that's also something that I consider whenever presenting you the wave counts and ideas here. But I always try to come out with ideas that is the most probable. Now looking also the Euro Swiss. So we talked about Euro Swiss and covered it a few times in the past. We said that this one is trading at the multi-year lows here. Of course, it's a downtrend, but maybe whenever we see this kind of extremes here, when you put together also what the ECB think it will happen next year, what market thinks it will happen, what Swiss National Bank is, or how they are looking at the current situation, then it makes you think that maybe Euro Swiss is ready to turn around, because Swiss National Bank, of course, is looking to take policy actions, maybe even negative rates, to limit the strength of Swiss franc. On the other hand, you had some ECB members who said that in 2026 they believe that the next move could be a hike. So that's something that could keep this Euro Swiss pretty interesting, especially when you have this then also on the top of that this bullish reversal. Okay, so that was a new multi-year low, and then we have seen a very nice 5 waves up. So that looks like a reversal, and now you have this 3-wave counter trend movement right into the previous 4th wave. So we are here in this, we can call it yellow box, the support box, where I think that market could stabilize, and would not be surprised if in a few weeks from now we will start trading higher back at these levels, while the market of course should then remain above this invalidation level. It's been November low. So that's the key, and that's what I really love about the Elliot waves in general, because it helps with the structures, guidelines, rules. It helps us to navigate the markets closely and exploring the idea with these useful invalidation levels and entries based on fib levels. Now, looking at crude oil, as you know, I have been wrong on crude oil. I was looking and expecting push to the upside of crude oil when we saw this first rebound back in October. So basically, what I see right now is that we can be still looking for some major support zone here. As you know, most of these moves that we have seen in the last few weeks was based on speculation that war between Russia and Ukraine will come to an end. They will reach agreement. However, that's, even if that would come true, because the market already priced in, the market will reverse, or at least slow down. But it will reverse even more aggressively if agreement will not be reached, right? Because the market then went too far. So I still assume that crude oil could possibly be looking for a recovery. I pulled out the chart in our chat room, but I don't have it here. But I noticed that since like from 2013 till 2020 or so, always when crude oil has been declining and moving to the downside aggressively in the final 2 months of the year, then in January, February, we have seen a recovery of crude oil. So maybe something similar could happen again here, especially if we start recovering back above this channel resistance here around $60 or 59. I think that we will have a lot of data to allow us to confirm that the low is really in. Also, when you look at maybe the bigger picture here, you can see that I'm counting this as a 5 waves down, and now maybe we still could be in this wave B consolidation. Now you are just at the lower side of the range. That's one interpretation. The second interpretation is, what if this whole decline is also a leading diagonal for wave A? And also, what this one suggests, even if you have 5 waves down, but because of the wedge shape, it suggests that we could see some support around maybe around $50 per barrel. Also, US oil reserves will most likely get filled if the price will keep pushing to the downside, because that's when they want to fill their reserves, when the price is cheaper, not expensive. So that's something also to consider. If we'll see sharp move to the downside, you can expect a rebound later on. So I think that, let's say, for at least first half of 2026, I would not be surprised if the crude oil will really show us some solid reversal here. Someone is asking, Gregor, can we look at emerging markets and commodities? Actually, I covered emerging markets and commodities in this 2026 video outlook. So the video will be released this week. So keep an eye on our notifications and these emails or X posts, because you will be able to find what I think about commodities in general, or the markets and other markets there, right? Now, looking at gold, as you know, gold is pushing to the upside. It's finally breaking higher, trying to catch the other markets. You can see the crazy moves here by palladium and platinum. These two broke to the upside with a bit delay compared to silver, which was the leader. Now also gold is trying to do the same. but it's still lagging. However, I think that this trend obviously could resume, especially if we consider that dollar still, dollar index I showed you earlier, still has a room for more, for another leg lower there. So looking here at this wave structure, I know that the wave pattern is not maybe the best here, especially when you consider that that was maybe a three-wave rise here, but someone came out with an idea what if that was some kind of a triangle that finished here in a wave 4 and now you're progressing higher. Well, the idea is because silver is still not showing a completed 5 waves up here when looking at the red wave cycle, right? I just think that after a pullback, even gold itself will see more upside. But because gold is much weaker compared to other metals at this stage, I think that rather than call this as invalidation level at 4247, we should call it or watch it for potential very strong support, especially if we consider a wedge formation, which is very possible that overlaps will occur if gold is much weaker compared to silver at this situation. So if we get a retracement, I think that there could be more upside. The first support would be at previous consolidation range here around 4,300, and then, as I said, 4,250 could be the next level to watch. Looking at silver and why maybe we should be aware of some pullbacks here. If you look closely on these subdivisions, I can count 5 waves up. Even here you will be able to count 5 waves up within wave 3, and now you are then in a wave 5. We are at the 261.8% extension. Also, there is still room for more upside, maybe closer. Let me write this be more precise here. I put the channel on the top of wave 1. So here comes in a resistance around $70, slightly higher. So
normal cell phone battery.
It's bullish until it's not.
Like an entire
And
month.
if you see pullback
Still,
on dips,
like a
the
day
previous
or
supports here of this
But
fourth
it
wave is
requires
around
a lot of
64.76.
silver.
That was also the swing high here
So
from
the supply
from 10 days back or so.
able to keep up.
So that's for metals.
Expect
Again, don't forget
invention
to
takes
press a
off.
like, please, here on this YouTube.
I have not
Don't
verified
forget
that,
to subscribe to our channel.
but
Now, let's take a look on the final one, which will be final coverage for today, which will be Bitcoin. So someone asked if I can look at the Bitcoin bigger cycle, like I think it's weekly. Anyway, I have here monthly wave count. So as I said already last time, markets will always move in cycles, and based on this red cycle here, you can clearly see that we recently maybe finished and completed this bull cycle. What is really concerning here, there are a few things. First thing is that we broke this channel support. The next thing is that you have stocks that are trading at very close to all-time highs, while you have Bitcoin cryptocurrencies still struggling. So if stocks would see some new pullback next year, even with some rebound on cryptocurrencies and Bitcoin in particular, it doesn't necessarily mean that Bitcoin will reach new highs. So I think that there's a chance, a risk that cryptocurrencies will consolidate at least in the first half of 2026. But if we see some drop closer to 50,000, 60,000, I think that this could be, from a price perspective, not time perspective, this could be quite interesting and attractive support. But what I'm saying that's not necessarily interesting from a time perspective is because if we are really entering since October this new 12 month of consolidation, then we know that October 2026 is something to watch for, right? So we are still far away before this market could really maybe start observing and showing us some interesting opportunities. That's one thing. The next thing is that, let me just show this one. I also shared this one on X. Okay. Okay, so Next thing is here we are looking at long-term holders, right? And you know, long-term holders are those that don't care about the price, how deep the market will go, because they will just try to stick with their longer-term perspective. However, lower the price goes, even more fear is involved, and when there is a lot of fear involved, no matter what your maybe longer term goal or plan, at the end of the day still this could be a very sentiment play, right? So even if the price, let's say, will move closer to 50,000 after that very strong push to the downside so far, there will be even more fear involved. What if it goes to 20,000? So that's when some new liquidations will occur, especially because there are some long-term holders that bought, let's say, for around 20, 30,000. So at some point they will not allow their positions to go
the market.
into the loss, right? So there could be even more liquidations, and if there will be more long-term holders that will liquidate their positions, this will take us into the stage where we will be closer to potential support. And if you will take a look here on long-term holders chart, you can basically see, I also got this in 2026 outlook, you can see that in the past occasions, always when we moved here into these extremes below value of 1, that's when long-term holders are start selling at a loss, right? It's been the case several times here over the last few years, and so far, despite this very nice push lower, we are still not in that area, right? So I mean, from that perspective, it looks like that there still could be some room and time for price of Bitcoin to push these markets in some kind of a new liquidations mode before they can rebound. Of course, this won't be the case always, but when I try to connect the dots between this data and the wave structure and the lagging compared to the stock market and the COT data of the dollar positioning, well, this raises a concern that maybe we really could see some deeper correction, deeper prices first, maybe some another shock to the downside before we eventually stabilize.
It takes a
right?
while for it
And
allocate.
when looking here at the maybe this
become effective
daily wave count as well,
and
we are
I think
just
there's a
chopping
lot more
around
in
here.
there than
Even
people
if
realize.
stocks is not trading around here, we are still down here. Even if it goes slightly higher here, and even if we start breaking above
think also
100K, I think that
it's another
171
dynamic
will be again
that
another very
people aren't accounting for.
important resistance. At the same time, when possibly
And I'm not
here the
saying
S&P
this to be
500,
political.
Nasdaq as well, could
Saying
try
it
to
from
complete wave 5.
objective
So that's something that
technical
we
standpoint.
should be aware of.
and that
Okay, traders, I hope
current
that you
administration
enjoyed
has
this
secured
presentation, this
think
video.
it's like
Don't forget to
20
put yourself on our
plus trillion dollars
newsletter list,
worth
as I
of
said.
investment
I will also put
pledges
this
from
link
all these
below
different
this video
leaders
here on YouTube
globally.
and also on X.
And
So
after
you will
all
be
the,
one of the first who will receive this video
royalty broker
in a few days.
to peace,
Also, we will have special offers as always
that
for the next year.
all
So
that
if someone
money is
will
gonna flow
want to
into
join
the US
our
dollar,
services community, you will
and
have
it's going to be
the
taxed
chance
under
to do this
the US system. So
with a
if you just take
discount.
the multiplicative
Traders,
effect
good luck this week. Keep in
that
mind
happens
it's
from that,
holiday season, so
Just
if
China
I
paying
won't make
tariffs
any
alone,
kind of a new webinar or post here on
take
YouTube
that and
in the
then
next
you
few days,
take-
because
according
I will
to
be mostly
ChatGPT, help me do the
offline. I
math
will
on
still
this.
be doing some
Because
updates.
that's super
Then of course I
complicated
wish you
math
all
to
the
try to
best
figure out.
in 2026.
Just
and hope
the
you to see you
300
in our
billion
webinar
that we tariff
each
from China
Monday
alone
next year. Traders,
being
good
taxed
luck.
in the
and
U.S.
talk to you soon.
system gets
Bye.
multiplied. I think it comes out to like over $1 trillion. People buy goods and services. They pay for employees who then go and then they buy stuff for their family. And in the stores they buy it from, they pay their employees. So that money gets taxed. It gets taxed several times, and that money was not there before. So the multiplicative effect is over $1 trillion easily. But if we got $21 trillion of money repatriating into the U.S. tax system, just from pledges, investing. So even if we just got like 1/5 of that, that's not accounting for all the tariff money. That's not accounting for the near $1 trillion of fraud and waste they cut out. I mean, there is a substantial surplus in the system that they're not talking about. It's not being accounted for. And yes, I agree. Historically, valuations are in the top 99 percentile. Don't get me wrong. But if the 90s is any analog of what is to be expected, then it could run for a while. And if you had cashed out early in the 90s, you missed an epic rally. And you know that the only game in town was the NASDAQ because of .com bubble. Well, guess what? We got .com bubble 2.0 called artificial intelligence, my friends. And that is still, I think it's reached critical mass and plateaued somewhat. But the rate of increase has slowed down, but it's still a net rate positive increase, and there's still a lot, I think, to come from that, which could support the market for a while. I mean, we might have a short near-term correction, but I think the overall long-term trend is intact unless something happens, something systemic, heaven forbid, like 9/11 or something like that. And with all the stuff that's getting uncovered and revealed, that, you know, and all the people who came into America undocumented, the potential for something like that is much higher than it has been as of late. And now that is something people should be watching out for and be having a plan to execute on in the event of the end.